Alrighty, folks, so as the weekend is wrapping up, and by the way, I hope you guys had a great weekend. Happy Mother's Day to all the mothers out there. You guys are greatly appreciated. As everything is wrapping up, it is now time to get ready for the stock market. And let me tell you guys, this week coming up is going to be a jam-packed week when it comes to the debt ceiling, when it comes to a bunch of companies reporting earnings. So we have a lot to break down. Needless to say, guys, in this video, we're going to break down earnings estimates. We're going to break down charts, what I'm looking to do for this week. Key levels that I'm looking at with these different stocks we're going to break down. So if y'all find value, hit that like button, make sure to subscribe, and don't forget to get up to 15 stocks for Moomoo. It is free money. Use that link down below or go to StasSurfest.com/Moomoo. Once you guys open up an account, you get one free share of stock right off the bat. And once you fund your account with at least $100, you get 4 more stocks, totaling 5 stocks. And once you put in at least $1,000 into the Moomoo account, you get 10 more stocks, totaling 15 free stocks. So if you guys want some free money, who doesn't like free money, and you want to help out the channel, use that Moomoo link. It is greatly appreciated, guys. And with that being said, let's dive right into the video. And by the way, this is Bed Bath & Beyond stock. We're not going to be talking about this one in this video. I did actually make a video earlier today that I am going to be buying a little bit more on the speculative side of my portfolio when it comes to Bed Bath & Beyond. But again, go check out that video, the last one, if you guys want to see my plan with that stock. So again, this week's going to be a jam-packed week. I hope you're ready. I'm trying to get ready, guys, right now as we are. What time is it? 9 p.m. when we're making this video. And again, happy Mother's Day to everybody out there. I spent some time with my mom today, with my fiance's mom, grandmothers. It was a great day. It was a fantastic day, and I can't say it enough. Happy Mother's Day to everybody out there watching. So on Tuesday, we have a lot of companies, well, Wednesday, Thursday, and Friday as well, but Tuesday is when we have Home Depot, ticker symbol HD. This stock has been doing, let's just say, not so well these past couple of weeks. Check it out, guys. This stock back in, when was this? The middle of February, so about 3 months ago, it was well over $300. We're talking $325, $330, $350, and now it's under $300. We're at what, $290? Even though on Friday it went up a little bit, it is still not looking so pretty. We're under $290, well, right around $290, but we're under the moving averages here. We have a death cross looming, which is the 50, about to cross under the 180 SMA. Essentially what a death cross is, guys, is whenever a smaller time frame moving average crosses under the larger time frame, which in this case is the 50 SMA crossing under the 180 SMA. That's looming. And we have a head and shoulders here as well. As you guys can see, we have the left shoulder, boom, head right there, boom, then we have the right shoulder right there. So earnings are on Tuesday, I believe, in the morning. They're always in the morning. Let me double check though, guys. Yes, morning. Yes, on the 16th, Tuesday morning, is when this company is reporting earnings. And if I transition over here, guys, to Safari, we can see what this company is actually projected to do. Bear with me really quickly so we can see this together. Bear with me, guys. Let me move my face a little bit. There we go. So we have, based on 29 analysts, so a lot of companies, or rather a lot of analysts track this company. Based on 29 analysts, we're looking at an average estimate on EPS of $3.48. On the low side, $3.34. On the high side, $3.64. And whatever it comes in at, the high, the low, the average, we are going to be under the year-ago EPS, which was just a little bit over $4, $4.09. And look at sales, guys. Average estimate is $35.02 billion. High estimate is $35.67. Low estimate, $34.32. And a year ago, they did $38.91 billion. So sales for Home Depot, they're going to be coming down a good chunk. 10% roughly is what the estimate is here for sales decline year over year for this company. And probably, guys, I'm not sure 100%, but that is probably priced into the stock right now if I have to guess. Again, the stock is down a good chunk over the past couple of weeks, and right now we have a head and shoulders, which I'm not the biggest fan of at all, and that's the way I'm looking at it. And the next stock we have on Tuesday, the next company, is Baidu. It's a Chinese company, guys, so if you don't like Chinese companies, I guess skip this part of the video. We actually have Alibaba on Thursday as well. We'll talk about that in a second. So Baidu's on Tuesday in the morning, I believe. Let me double check that though. yeah, 516 is Tuesday. That's in the morning, and this stock has not been doing well at all. It's literally gone straight down since the end of March, so about a month and a half at this point. It went from roughly 160 down to about 120. That's a drop of 25%. Not the best look there for Baidu. And coming back here to the Safari tab, bear with me. We're going to do a lot of back and forth in this video, guys. Let me actually pull up Baidu here. If we take a look at what they're looking to do, guys, bear with me. The ticker is BIDU. If I pull up the analysis tab and make my face a little bit smaller, or just pop it here to the right, we're going to be able to see they're not looking so pretty when it comes to growth, although they are growing year over year on revenue, but not nearly as much as they were, some time ago. We can see based on 15 analysts, average EPS is estimated at $1.79. The low estimate's $1.23, high estimate's $1.99, and a year ago they did $1.66. And coming down here on revenue, the average estimate is $4.31 billion, low estimate $4.2, high estimate $4.36, with a year ago them doing $3.93, or rather $3.95. Either way, this company is growing revenue year over year, but not nearly as much as it once was. And we are seeing, sales growth projected at about 9.2% for Baidu. So going back over to the chart, I would actually love to see this thing reverse, which we're not showing any signs of that quite yet. I'm not going to lie, guys. But if we can start seeing a pop, let's say back over, where's a big level of resistance right now? Right around here. If I zoom in, you guys will see we held support at $128 back in the middle of January, back in February, back in March, right? Back in April as well, until we ran right through it. So that's going to be the next spot we need to break. If this could break 128, we start getting over that 180 SMA, there could be a lot more upside on Baidu, at least in my opinion. So right now, I'm going to set my alert at 128, mark is at or above on Baidu. Then on Wednesday, we have good old Target, guys, ticker symbol TGT, which this stock has also been underperforming. It has not been doing well over the past couple of months, but we do have a wedge here on the 4-hour time frame. Do you guys see that? We have higher lows being made, but at the same time, we are making lower highs. So what direction are we going to pick? Is Target going to break out of, let's say, 160, 165 to the upside? That'd be a huge move, in my opinion. We could be going a lot higher at that point, or are we going to fall through 150, take the lows out from the last week or two being about 151, and start selling off a lot more from there? I don't know. Time will tell. I'll set my alert at 152 as well. Mark is at or below. And again, when it comes to Target stock, guys, on the charts here, we have to wait and see what direction is looking like. So what is Target going to do? Let me actually pull this up and search it here. Bear with me, guys. Ticker symbol TGT, not DGT. TGT. We can see here. Let me make my face a little bit smaller, or just pop it to the right here. We can see based on 29 analysts, average estimate EPS is $1.77. Average revenue is right around $25.33 billion. That's up a whopping 0.6% year over year. So essentially, guys, Target is going to be flat year over year. A year ago, they did $25.17 billion. And if the low estimate comes in on sales, $24.75, that's actually going to be a decline year over year. And let's just say if that happens, this stock will probably sell off even more, as that arguably is not priced in as of right now. So Target, again, watch out for that direction on this wedge on the 4-hour chart. It is very important moving forward for the stock, especially if you're looking at this as a short-term trade, which, mind you, guys, all these companies, all these stocks we're going to break down, they're for short-term trades. I'm not saying they're awful long-term investments. They're not. Well, maybe some of them might be. We're not going to get into that in this video, but these are, from my perspective, the way I'm looking at them is, well, again, as a short-term trade. So we're also looking at Cisco on Tuesday, or actually, no, Wednesday, rather. Excuse me, guys. That is ticker symbol CSCO, and this kind of broke trend a couple of weeks ago, really about almost a month ago. We broke trend. We started falling under this uptrend. We have a death cross now. We're under the moving averages, and it's fighting to, regain its ground. At least the bulls are fighting, but it doesn't look like they're going to succeed until we start breaking out of, in my opinion, $48-ish, maybe $49 per share. So I'll set my alert now at $48.49, and the reason why I'm putting it there is because, well, that's right by the 180 SMA, and that's also right by the support support from the beginning of March heading into pretty much the middle of April. So we have to retake that $48 level, preferably, $49 as well. I'll set my alert at $49, and we'll see where it goes from that point, guys. Mark is out. We're above $49. Let me actually shift over here to Safari and see what this company is looking to do. So Cisco is CSCO. Let me pull it up here, guys, and I appreciate you all for tuning in, for bearing with me as I am doing this kind of off-the-cuff video tonight, guys. Didn't do too much note-taking or prepping. Either way, here we are. We're running through it together, and that's the fun of this YouTube channel, guys. It's not the most edited channel, or it's not the most high production, but it's all good, right? Better nothing, right? Better than nothing, right? So average estimate for Cisco is 97 cents when it comes to EPS, based on 19 analysts, and we have the average revenue estimate at $14.39 billion on 17 analysts, with a year ago them doing $12.84 billion. So either way, guys, they're going to be growing a good chunk year over year. Roughly 12% growth for sales is expected. So let's see what direction Cisco could end up picking here on the 4-hour time frame. Do we break back over 48, 49? That would be completely phenomenal overall for, of course, for the Bulls. So that is CSCO. We also have, what else on Wednesday? We have TTWO, which is a video game company. You guys probably have heard of them. Maybe not. They're called Take-Two Interactive. Let me pop the chart up and show you guys. This stock has actually been doing pretty well these past couple of months, although now that I'm looking at it, it has not recovered the gains since the loss from the two earnings reports ago. You guys can see TTWO went from 124 all the way to $87 in the span of about 2 weeks. That was a drop of 30%. That's brutal. And we've pretty much spent the last couple of months recovering that entire loss. We're talking 6-7 months. The past 6-7 months we've spent recovering that loss. So are we going to run through, let's say, $127, $130 on TTWO? I was about to say Cisco. On TTWO. If so, guys, that's where the Bulls could really start gaining more momentum. So I'm going to set my alert at, let's just say, 132 right now. Mark is out or above. And if we do take out that point, popping up the 3-year chart, we could make some headway towards 140s, maybe the 150s again. That could be possible here on TTWO. So let me see what their projections are, guys. Bear with me. And by the way, if you have not hit that like button yet, hit that like button. Make sure to subscribe as well. I appreciate you guys as always. Without you, your support, this channel would not be possible at all. Trust me, guys, this would not be possible. So this is TTWO. Again, Take-Two Interactive Software. They're reporting on Wednesday, and this company is actually looking to do pretty well this earnings season. So look, average EPS based on 24 analysts is 68 cents, and the average revenue estimate is $1.34 billion. That would be up 58% year over year, with them doing sales a year ago of around 842 or 845 whatever $million. So they're looking to pop aggressively on the sales side of things. EPS maybe not so much. Actually, they're going to be declining in EPS. A year ago they did $1.09. Now they're looking to do 68 cents on the average estimate, so probably going to decline a little bit there. But overall, guys, very solid projections there for TTWO on revenue, and we just have to wait and see what happens on the charts. Again, we are right now at a big spot on the stock. Major resistance if we plowed through the 130s into the 140s. Let's just say that's going to be a very good sign overall for the Bulls. And by the way, have you guys gotten your free stocks yet from Moomoo? If you haven't done that already, you get up to 15 stocks, each up to $2,000. All you have to do is use that link down below or go to StasSurFest.com/Moomoo. Once you open up an account, right off the bat, you get 1 free share of stock. And once you fund your account with at least $100, you get 4 more stocks, totaling 5 stocks. And once you fund your account with at least $1,000, are you ready for this, guys? You get 10 more stocks, totaling 15 free stocks. So if you want some free money and you want to help out the channel, use that Moomoo link down below, or again, go to StasSurFest.com/Moomoo. It is greatly appreciated. And with that being said, cheers, guys. I wish I had a beverage. Actually, I do. I have some water here, guys. Stay hydrated. Cheers. And with that being said, let's talk about a couple more stocks that I'm looking at least heading into this week. On Thursday, we have Alibaba, which this stock, you guys know, has gotten completely destroyed from the $300 plus all-time high. And even in the past couple of weeks, this stock has not been doing well at all. It went from 120, now it's at 85. We have a head and shoulders clearly playing out. And for me, guys, to even consider trading Alibaba, we have to break out of the neckline, which in this case is right at 95 bucks a share. So I'll put my alert at 95 bucks right off the bat. Let's see if we break the neckline from there. Maybe we go to 105. Maybe we go higher than that. Time will tell. So Alibaba is on Thursday, I believe, in the morning. They're typically always in the morning. And if I pull up Safari, let me do this quickly, guys. We can see here, based on 21 analysts, they're looking to do EPS on average of $1.35. A year ago, they did $1.18. And on sales, the sales side of things, on average, they're looking to do $30.25 billion revenue compared to about $28.35 that they did a year ago, with sales growth being about 9.7 or actually 6.7%. Not too bad there for Alibaba. Of course, not what it once was, but it's still growing a little bit there, 6.7% year over year. So again, be very mindful of that neckline. I cannot say it enough, guys. That is a very critical pattern that I'm noticing right now, or a critical spot on the chart that needs to break. And if it does, we could be seeing a lot more upside on Alibaba. And how could I forget about Walmart, guys? We also have Walmart on Thursday, which is at a very pivotal point here on the charts. If we do break out of 155 bucks, as you guys can see here, we also have an ascending triangle. If we do break out of 155, this could be seeing a massive move. Breakout could be on the horizon. And well, at that point, 160 plus all-time highs, they're literally right around the corner. I believe the all-time highs are at 160 bucks. Yeah, literally $8 away. If we do crush these earnings, guidance is strong. Walmart could be setting up for a big breakout. So let me actually pull up the Safari tab and see what in the world Walmart is looking to do, as this stock has been doing very well recently. So maybe a lot of it is already priced in. I don't know. We shall see. And let's see here. Based on 33 analysts, they're looking to do average EPS of $1.20. You guys see that right there. Revenue, the average is right around $135 billion. Oh my gosh. Their top line is insane, guys. $135 billion. Imagine that, right? Imagine all that money sitting in a room or something. Well, it probably wouldn't even fit in a huge room. Not now that I'm thinking about it. But either way, think about how much money that is in a quarter, guys. Insane. And sales, you guys can see, they're projected to decline by 4.1%, which is not the best sign overall, but I guess that's priced in. The stock market doesn't really care, as again, this stock's been doing very well, as we saw on the charts, guys. So what do you think? We're going to be watching a bunch of stocks this week. That's my thoughts on those are my thoughts on Walmart and a bunch of other companies and their charts. What do you guys think? Let me know your thoughts down below in the comments, and hit that like button. Feel free to subscribe, and don't forget to get up to 15 stocks from Moomoo and 12 stocks from Webull. Link down below. Or of course, you can go to StasSurfS.com/Moomoo or StasSurfS.com/Webull. And if you guys want to check out my Patreon, feel free to do that as well. That's linked down below. All the details are there. And with that being said, cheers, guys. I'll catch you in the next video.